Okay, folks, so we've got a lot of violence to talk about today. If you haven't noticed or haven't been watching our videos, the market has been very different and has continued to be different today. We're in a situation where things are moving healthily along. You don't have like this insane euphoria like you had in February and January, although you do have that in some stocks. But for the most part, you don't have that in the entire market, and you don't have that same level of dysphoria either where you're always worried about the next big lockdown that you had last year. Things are moving along, things are getting better, people are anticipating better GDP growth, everybody's happy, people are getting outside, people are making money in the markets again, and of course when everything gets calm and smooth and green, well, the experts start coming out and predicting 12 years of negative returns being right around the corner. If you better sell the wife, the kids, and your neighbor Susan. Well, if you need more signs of proof, all you gotta do is zoom into this image. 12 years of negative returns are right around the corner. But anyways, jokes aside, I wanna talk about something that you're ignoring right now, and these are opportunities that are still drenched in a fair amount of FUD. And we'll be talking about those, and we'll also be updating on AMC for you Ooga Booga folks. And the only thing that I ask in return for all of this is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, so let's go ahead and start with an update on Bitcoin and Bitcoin miners Mara Lovely Mara and Riot Riety Riot. So we've been dealing with an extensive crypto winter over the last couple of months, from which Bitcoin has been bouncing around the 30s. Now, the newest negative catalyst for the coin of Bit has been the Chinese mining crackdown. China's cutting down on Bitcoin miners to a dramatic extent. Upwards of 90% of miners in the country, apparently. And considering about 2 to 3/4 of Bitcoin mining happens in China, that's a big stinking deal. Definite setback. But keep in mind that when the supply of Bitcoin miners goes down, that means that existing Bitcoin miners that are still in operation get to enjoy more of the market size and get to enjoy more rewards. And so crypto miners in North America like Mara and Riot, amongst others, while they may have not been peachy this week, they've held up a lot better than otherwise would have been expected. Both Mara and Riot continued trading at a 20 to 30% premium over their previous lows, despite the fact that this time around, Bitcoin got pummeled farther than it did last time. Why is that? Well, because there's two different variables with crypto miners. You have obviously what they're mining, the value of what they're mining, in this case Bitcoin. What is Bitcoin trading at in any given time? And then the other part of the value is how much Bitcoin it can produce, how easily, how much profit margin there is, how much of the market potential they have. And in this case, you had a negative shock to valuation. The price of Bitcoin went down, but you had a positive shock to the production. And obviously, because there's some overlap between production and valuation and regulatory policies in terms of Bitcoin factoring into the valuation quite a bit, it could definitely put a lot of short-term clouds over the valuation when you have this side going up really quickly. And of course, if valuation drops faster than production can outweigh it, then obviously it's still going to go down and you're going to lose money. But I think the bigger picture here is that these are short-term FUD catalysts. The Bitcoin network was specifically built to withstand pressure like this. That's the whole point of having a decentralized network. In fact, I'd argue that this actually increases the value of Bitcoin over the long term. Think about it. Would you feel more comfortable buying a cryptocurrency where more than half of its mining is done in China? Or would you feel more comfortable buying a cryptocurrency where its mining is done all around the world and it's more diversified? If you're trying to get away from governments and centralized power, why would you put a lot of money in something that has basically extended itself to being at the helm of the Chinese Communist Party? I mean, a decentralized network in a very centralized economy is a joke. Decentralization comes from being fairly equally or at least proportionately distributed around the world. When you have too much of the infrastructure in one country, that's a huge liability. The fact that China is making this happen actually adds a lot of long-term value to the currency. The other thing is that the Asia-Pacific market actually happens to be some of the least green for mining crypto, with substantially more coal usage than all other regions. And with most Chinese miners looking to relocate to North America, well, the standards are going to change dramatically. Obviously, it's not completely green here either, but there's substantially more green usage here and substantially more variety in terms of green usage in North America than there was in China. So the fact that a lot of them are going to be moving to the North America market and some others may be going to Latin America and Europe where it's also more green, well, a huge byproduct of that is it's actually pushing Bitcoin to become a lot more green a lot faster than otherwise it would have. Keep in mind, the Bitcoin network was built for this. It's extremely adaptive, but you got to give it some time. This is a short-term bad catalyst for Bitcoin. So my main outlook on Bitcoin is that this is a sleeping giant. We don't know exactly when it's going to wake up, but it's certainly a sleeping giant. It is in the process of some short-term pain, but let it take a breath. You imagine having a racehorse that runs 24/7 for a year, and then the minute it takes a breath because it needs to, you decide to shoot it and feed it to your family? Like, come on, that's just sick, folks. You gotta have a heart. Even with its dramatic sell-offs, it's up like 274% year over year. let it breathe. We all believe in the cryptocurrency market, and there's some FUD in it right now, and there's just some general breathtaking that needs to be done right now. Let it rest, because when she wakes again, she's going to be one hell of a monster. Okay, next, what about PLTR? So PLTR has gone from 16 to 26 in the span of like a month and a half. That's like a 60% rally. Obviously, it's frustrated a lot of folks because it's been a very slow play compared to a lot of the other growth plays. But I mean, still, if you compare the S&P 500's return in the last month to the PLTR's, well, the S&P 500 returned about 4% in the same time span that PLTR returned 60%. And that's just from like May 10th. Obviously, a big part of that is because PLTR is a growth stock, so its dips are dramatic and its rises are just as dramatic. Obviously, we like to focus on growth stocks specifically because of this nature. It's going to cycle back and forth, which means more active management and more risks, but also more potential. And it's that same fluctuation that allows you to catch a 60% run in PLTR at the same time where the S&P only did a few percent. And obviously, your exposure to one or the other is going to be based on your risk management and your tolerance and your goals, but that's another story. Nonetheless, PLTR, while kind of boring compared to a lot of the other growth plays, has gone up like 60% in a month. But PLTR is getting no attention right now. Think about how this was like one of the most popular retail stocks last year and the beginning of this year, and it's pretty crazy to think of that. If you remember, pretty much every comment, every message, every article, and every YouTube video was about PLTR at the time. And we've broken it down many times. It's legitimately a great company. But the idea that nobody's talking about it right now is a very interesting opportunity. And you look at Google Trends for how many people have been searching PLTR, its upward direction in searches was directly correlated with the amount of people who felt they'd be able to make fast money in it because it was directly correlated with PLTR going up. It went up as more people talked about it, and as more people talked about it, it went up more, and PLTR went up more, and more people bought it, and it became a cycle. But then all of a sudden, the inflation trade, everything started pulling back massively, and interest totally fell off the face of the earth because people were like, okay, there's no more fast returns in this one. However, keep in mind that companies should get more interesting when the price goes down, not less interesting. The more it goes down, the less risk you take on, and the more you get for what you pay. But if you look at a lot of these trends, it seems like people are only interested in stocks that are breaking out into new highs. And so the hottest new stock that's making new momentum is going to get all the searches, while a stock that may be going up dramatically but hasn't gotten back to its previous highs will be pushed under the table. Despite PLTR going up dramatically in the last month, it's consistently been trending down in terms of interest. And why is that? Did people not want a 60% return? Well, obviously not, but rather because people don't believe in something unless everybody else around them believes in something. And people aren't convinced that that's what's happening until something breaks out into all-time highs. So right now, I would not ignore PLTR. I understand that we talked our heads off about this during its biggest dips of the last few months. But keep in mind, the reason you're not hearing a lot of good stuff about PLTR right now is because it's not shiny yet. When it is shiny, mark my words, whether that's in 2 months, whether that's in 8 months, everybody's going to be talking about how you should be buying it at all-time highs, and that's when all these articles are going to start pumping it again. And you'll see the search trend pick up dramatically. It's a lot of these high conviction but quiet plays where a lot of the gains are made. And really the only cost to the individual is perhaps patience. Okay, next, AMC update. So not much new today with the stock, but you know the spiel, ooga booga ape. The latest thing I wanted to talk to you about was the NSCC framework that you've likely heard of by now. The liquidity of some of the most powerful market makers. We'll spitball and say sit a dork. Well, their market power is going to be dramatically reduced because of rising deposit requirements. If you have to put in more money, you have to put more of a down payment in to get a certain amount of margin, well, you're not able to get as much margin. But keep in mind that margin is one of the biggest inequities in the market. Not only does the big money have billions and billions of dollars to throw around in the market, but guess what? They can also leverage a lot more than we can. And if you're leveraging from 1 to 100 or 1 to 50 or 1 to 5,000, every single dollar has such a huge impact. It goes so far. That's money that you can throw around to long stocks, but also massively short sell stocks. And so basically these regulations trim down the power of hedge funds dramatically. You know how you slowly eat away at hedges? You trim them. Bush by bush and branch by branch. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. And of course, quick plug, if you'd like to learn how to trade, would like access to our private chat and daily morning briefings where we brief on all the biggest catalysts each and every morning, well, I'll go ahead and put a link to ZipTrader you below. But folks, please only join us if you're going to commit yourself to the process. Practicing paper trading with every single concept and then never giving up when times get tough. The program was thoughtfully created to give you a process to learn and grow, but if you don't complete the structure and dedicate yourself to doing every single lesson and doing it as and completing it as designed, then you're not going to get anywhere. When I buy something, I make sure that I'm going to get my money's worth out of it. So I expect you to do the same. And if you'd like to take the leap and join us, I'll go ahead and put a coupon code in the description below. Battlefield75 will get you $75 off before checkout. You just put it in the little add coupon code spot before checkout. And if you're wondering what broker to trade these stocks on, we always like to send new traders over to Webull. I'll put a link to them below as well. And signing up and depositing with the link below will also get you some free stocks. Anyways, have a great day, and I'll see you in the next video.